There's sort of two themes on the oil price that we're looking at. One is the decoupling between the Brent price and the WTI price, and the second is the exchange rate impact for Australian players on the US dollar Brent price. So the two key things with respect to Brent, we really like the Cooper Basin players, Santos, Senex, Beach. They're producing, selling at the Brent price, reporting back in AUD, which means last quarter they got $115 to $125 per barrel. This is resulting in really good cash flow for those companies. So that's obviously a theme we're following closely, and we think that the Brent price will actually be increasing over the next quarter rather than declining as we're seeing in some of the forecasts. In the US, looking at the WTI pricing, it has declined recently, decoupling from the Brent price. However, it's still above the cost of most of these resource players of getting the oil out of the ground, and they're still making good margins. And what we see for those players over there is a lot of increasing activity. Costs are low on the service side, and so again, they're still making a good margin even at these lower WTI prices, and we do expect that gap to close going forward. It's really one of the main things is a decline in Libyan output, which has had an impact on supply. A lot of the tensions in the Middle East, people are saying, are going away, but the main driver is actually, for us, supply versus demand. We do have strong demand, and we do see some declines just in the near term, which should drive prices higher. The Cooper Basin has been a long-time producer of both oil and gas. It's got a long history of production and was actually declining. So output was declining, and people were looking at what the life of the Cooper Basin was going to be. Recently, with 3D seismic being applied, all of the companies there have identified new oil potential. On top of that, with the current high oil prices, certain oil that was considered probably non-commercial in the past is actually very commercial now. And then there's also additional technologies that haven't been applied in the past, horizontal drilling, hydraulic fracture stimulation, not that they're using it on oil at the moment. All these things can be applied to actually even get more oil out of the ground that probably was seen in the past, but was never considered to be producible. So we think that what we'll see is over the next 2 years, growing oil production output out of these players, and maybe even longer than that. And that will benefit all of them. Also, these identification of new areas of production, such as wet gas. So we've seen Drill Search and Beach together increase wet gas production. So that not only are they selling into the gas market, but condensate, which is why we call it wet gas. So basically, oil can also be produced from the same play. And so new areas are being discovered that have this potential as well.